So you did it. You finally bought the car you've been dreaming of. The excitement is absolutely electric, and you're just itching to hit the road. But hang on. Before you do, there's one really crucial step that often gets lost in that new car smell: picking the right insurance. So let's dive in and make sure your peace of mind is just as protected as your shiny new ride.
I mean, it's such a huge moment, right? It's a symbol of freedom, of getting ahead. You've spent all this time picking the perfect model, the right color. You can probably already picture those long road trips. It's so much more than just a purchase. It's a real milestone in your life.
But here's the question we all kind of dread. What happens when the unexpected strikes? You know, a fender bender, a theft, or even a natural disaster. All of a sudden, that amazing milestone can turn into a massive financial nightmare. And that's exactly where insurance comes in, which makes getting it right a really high-stakes decision.
Now I get it. A lot of people just grab the cheapest, most basic policy they can find, just to be legal. But as we're about to see, that tick-the-box approach can leave you seriously exposed. Honestly, choosing the right insurance is probably one of the most important financial decisions you'll make as a car owner.
A really solid policy is built on these 4 pillars. Of course, you've got legal compliance. That's a given. It's the law. But what's truly critical are the other 3. We're talking about real financial protection from huge repair bills, personal safety for you and anyone in your car, and maybe most importantly, that peace of mind that lets you actually enjoy driving without worrying.
So when you're starting out, your first big choice really boils down to 2 very different paths. You can go for basic coverage, or you can get all-around protection. Let's break down what that actually means for you. First up, you have third-party insurance. Just think of this as the absolute bare minimum legal requirement. All it does is cover damage you might cause to someone else, their car, their property, or heaven forbid, them. But, and you have to hear this, it does absolutely nothing for your car. Not a thing. And when you put them side by side, the difference is just night and day. Third party only covers the other guy. Comprehensive, on the other hand, protects both you and them. It's the difference between partial safety and total security. With comprehensive, your car is covered for accidents, theft, fire, floods, you name it. Sure, third party might be okay for an old car that barely leaves the driveway, but for pretty much everyone else, comprehensive is the only choice that really makes sense.
All right, let's talk about the money side of things. There are 2 key terms that directly control how much you pay for your policy and how much you get back if you make a claim. They're called IDV and deductibles. Let's crack the code on these.
Okay, so the Insured Declared Value, or IDV, is basically the agreed-upon price tag for your car between you and your insurer. It's the absolute maximum amount you'll get paid if your car is stolen or, worse, damaged beyond repair. Getting this number right is so important.
Let's play this out. Say your car's market value is about 8 lakh rupees. If you set your IDV right there at 8 lakh, yeah, your premium will be a little higher. But if the worst happens, you get that full value back. No nasty surprises, no financial gaps. But what if you try to save a few bucks? You set that IDV lower, say at 6 lakh. Your premium drops, and that feels pretty good at the time. The problem is, if your car gets totaled, you're only getting 6 lakh back. That leaves you with a massive 2 lakh rupee hole to fill out of your own pocket. Suddenly, that small saving doesn't seem worth it at all, does it? The other piece of the puzzle is the deductible. It's really simple. This is your share of any repair bill. You agree to pay a small, fixed amount first, and then the insurance company jumps in and covers the rest. You can choose a higher deductible to lower your premium, but just make sure it's an amount you'd be comfortable paying on a bad day. Okay, so we've got the policy types and the pricing down. But a great policy is only as good as the company behind it. So now, let's talk about how to choose an insurer you can actually rely on when you need them the most. First thing you have to look at is the claims settlement ratio, or CSR. Think of it like the insurer's report card. A company with a 95% CSR, that's an A-plus student. They're reliable. But an insurer with a 78% ratio, that is a huge red flag. It means there's a more than 1 in 5 chance your legitimate claim could get denied. You want to stick with companies that are well above that 90% mark. Next up, check out their network of approved garages. Why does this matter? Well, a wide network means you can easily find a trusted repair shop even if you're on a road trip far from home. And the best part is the cashless facility. This means the insurer pays the garage directly. You're not left scrambling to find thousands of rupees right after a stressful accident. It just makes the whole process so much smoother. And finally, please don't just take the insurance company's word for it. You have to dig into online reviews and see what actual customers are saying. This is where you find the real story, the unvarnished truth about their customer service, how transparent they are, and how they really behave when someone needs to make a claim. Do not skip this step.
All right, once you've picked a solid, comprehensive policy from a company you trust, you can start to customize it with add-ons. You can think of these like power-ups in a video game. They fill in specific gaps in your coverage and give you this extra layer of, well, bulletproof protection.
Here are a few of the most valuable ones. Zero depreciation is a game changer. It means you get paid for the full cost of new parts, not a lower depreciated value. Engine protection is so important, especially during monsoon season, since it covers water damage that standard policies won't touch. Roadside assistance is basically your 24/7 guardian angel for breakdowns. And return to invoice? That's the ultimate safety net, getting you the original price of the car back if it's ever stolen or totaled.
Okay, wow, we have covered a lot of ground. So let's bring it all home and put it together in a simple, straightforward checklist that you can use to make the right decision.
This is your game plan. 1. Choose comprehensive for real protection. 2. Set a fair IDV that actually matches your car's value. 3. Make sure that CSR is above 90%. 4. Check that their garage network works for you. 5. Pick only the add-ons that make sense for your situation. And 6, and this is the big one, always remember that the cheapest premium almost never equals the best coverage.
So as you make your final choice, I want to leave you with this one last thought. Car insurance isn't just another bill to be paid. It's a critical investment in your financial security and your peace of mind. So the real question you have to ask yourself is this: is saving a tiny amount of money today really worth the massive risk of losing it all tomorrow? Drive smart, but protect your investment even smarter.